Good afternoon. Happy Monday, March 1st. Spring is right around the corner. I can't wait. Days are getting longer. Hope you feel the same. It is Monday, and that means it's time for this week's edition of the Risk Safeguard Advantage podcast. I'm JBelek, your host, coming to you from the headquarter offices of Sinclair Risk and Financial Management. Last week, we had a very good discussion around mental health, which gave a lot of positive feedback and good conversation with clients and prospective clients. And one of the things that came back was that some of our clients were concerned that their workforce would not be interested or unwilling to engage in discussions around mental health. And what's important for the leaders out there to know is that mental health may not manifest itself in employees coming into your office telling you they're not doing well or they need help or they don't feel good. It's going to manifest itself in your injury reports. Just last week, very tragic accident, 2 workers in Boston killed. And that's what happens when people's minds are distracted or not their best self. They're not paying attention to the dangerous job that they are conducting every day, and bad things happen. And unfortunately, that's the reason the risk and insurance industry exists. Bad things happen to good people. So my goal of talking to you about mental health is making sure that you are aware of it so that you can look for signs of it in your workforce before something bad happens to you. On that note, we're going to pivot and we're going to talk a little bit today about captive insurance programs. And I'm not surprised that just last week I read an article that said interest in captive insurance programs is at an all-time high. And that is usually the case when you see some hardness or firmness in the insurance marketplace. Unfortunately, our industry does not do a good job of educating clients, but they're awfully good at trying to sell them something. And that's how agents go around talking about captive insurance programs. Go into a captive insurance program, it's going to save you all this money. Well, that sometimes is the case, and there's a very good opportunity with captive insurance programs. We at Sinclair here offer them to clients, but it has to make sense for the individual business and the individual clients. It's not a broad market-based one-size-fits-all solution, and there's a lot of work you have to do before you realize whether a captive is the right option for your business or not. There's financial reviews, there's loss reviews, there's safety program reviews. Ultimately, a captive is a vehicle that if you're doing everything you're supposed to be doing to manage your risk and make you a profitable risk for the insurance industry, well, then you exit and you go into your own vessel, which is a captive insurance program where you would take advantage of the profits. Very simple exhibit I have for you here. 4 quarters represent your insurance spend. For every dollar you give the insurance company, and the numbers are a little tweaked, but for round numbers purposes, you put 2 of your 4 quarters in a claims fund bucket or jar for this exhibit. The other 50 cents goes to fixed expenses. So every year you pay your insurance premiums into a captive insurance program, you're putting half of your money into a claims fund, of which when you incur claims, you pull out. So if you want a very simple litmus test, look at what you pay your insurance carriers for your workers' comp, your liability, and your auto program over the longevity of a 5 to 10 year period. If you are making insurance companies money year after year after year and are of significant size, a captive may work well for you. It may not. And there's also financial and collateral requirements that may be inhibitive of your business if you were to enter into it. The biggest thing I want you to understand is agents that are selling these captive programs, similar to mortgage brokers who were selling adjustable rate or balloon payment mortgages prior to the financial crisis, can get you into something that you have a lot of challenges with down the road if you're not prepared. So if you are one of the buyers out there interested in a captive program, let's have a discussion. It's a great vehicle for the right fit, but don't go into it based on promises and commitments of how much money you're going to save, because you may not find out it's going to work out that way until it's too late. That's all for today. JBelek, Sinclair Risk and Financial Management. Have a safe and happy week. Take care.